What's going on, guys? Thank you for tuning into this episode of Twin Finance. I am Jackson. Today we're going to talk about 3 stock picks for June 2018. These stocks, as you would know if you watch my other videos, I'm not going to go out and say these stocks next month, 30% returns. I'm just saying these stocks are a fair value, good mid to long-term investment for my standards and the way I evaluate stocks, value investor. So these stocks will emulate how I pick stocks, and if you looked at their balance sheets, financial statements, you'd probably stumble across the same reasons why I picked them. So I'll just run over like a few basic reasons over each stock and why I believe they're a good purchase. So let's just hop right into it. So stock number 1, if you watched my last video, they were in there too for stock buys May 2018, and this is Sinet Jewelers. How do you spell that? Like this? Yeah, I think. Yeah. So Sinet Jewelers. Sinet Jewelers, as I said in the other video, they own Jared, Zales, and Kay. So there's basically like 3 out of the top 4 big names in like diamond sales in America. So they have a pretty good share of the market. Their balance sheet, it's pretty good, guys. They got a good financial position as a company moving forward. They don't have a lot of long-term debt. They got a lot of current assets. Their inventories, obviously they're going to carry more inventories. They got to have a lot of diamonds and stuff like that for people coming in the doors. But I wouldn't say their inventories, diamonds, they don't depreciate over time and stuff like that with cars. Like if a car company's building up a lot of inventory, obviously you're not going to like it. Those year's models, next year models come out, 2017 year models, they get old, no one likes it, so they got to accept losses and stuff like that on those years. So a lot of people, they might look at their balance sheet, see their inventory, it's a decent amount, and get a little scared. Don't worry about it with them, guys. That's pretty standard in the diamond in jewelry industry. So that's good. Their earnings have been stable. They pay a good dividend. They introduced it, I believe, 6-7 years ago. They've been increasing it They increase it every year. That's just what I'm trying to get at. They increase their dividend every year. Their stock has been selling off for the last couple of years. I believe that was due to the Amazon fad coming in. It's going to take over retail. It's going to kill everything. As I've mentioned, they're a retail diamond store. Personally, I don't believe this industry is ever going to take a hit from Amazon. People like to go into the stores, try on diamonds, custom fit them, things of that nature. Amazon's never going to take that business over the online world. So I believe in this stock for the long term. I believe the company has good growth aspects. They don't have a crazy market cap or anything like that right now, but I believe one day down the road, Sinet might be a bigger company for sure. So that's stock number 1. I know I didn't write anything down because they were mentioned in the other video, so I'm not going to get too in depth to that. But stock number 2 going to be Berkshire Hathaway. I'm just going to write Berkshire. So Berkshire. So obviously, if you have a lot of money, Berkshire A, like if you want to buy Class A shares of Berkshire, it's going to run you a few $100,000. But obviously, for the average investor, we can't afford those shares. So their Class B shares they're trading under $190 now, guys. So they're under $190. I don't remember quite what their peak was. They fluctuate like the market, guys. The market's pretty flat this year. They're a touchdown. They got a big market cap, so obviously they're going to fluctuate quite like the market. But right now, guys, they got a PE of 10. I believe it's under 10 or 10. So their PE is very low. So that's obviously a big standout with them. Obviously, Warren Buffett runs a company, so they got good management. Obviously, he knows what he's talking about. I don't really got to get too much into his past for you to understand. He knows what he's talking about. I don't got to get too deep into his resume. I don't gotta vouch for Warren Buffett. So obviously you believe in the management of the company. That's pretty huge. When you're looking at stocks, obviously big management decisions can sway that stock movement over time. So yeah, obviously you want to have strong management. They're trading at a low PE right now. Obviously Berkshire's Class B shares, they do not pay a dividend, but companies will oftentimes not pay dividends if they believe, instead of paying a dividend, if I can reinvest this money into the company, it'll reward my shareholders by me compounding that money reinvested into the company and paying it out in a share price gain. So like I said, personally, if Warren Buffett paid me a dividend and then he said, look, you can take this dividend and make it into more money, or I can take that dividend and make it more money, I'm a pretty confident guy, but hey, I'm not gonna bet on myself to out compound Warren Buffett in the long haul, guys. So I believe that, a lot of people might get scared away. They want a stock that pays a dividend. They want that recurring income. But Warren Buffett keeping that dividend and using it to build and grow the company, that's not a turnoff for me, guys. So that's just another reason why I believe in the stock. Great company. One day, maybe be up there, top 2, top 3 biggest companies in the world. I think it's already like top 5, but. So yeah, let's get into the third stock that I picked for this month at its current price, and that's a smaller company on the scales of Berkshire Hathaway. Obviously, it's not remotely that large, but it's Albemarle, whatever you want to call it. So, just give you a quick rundown of what Albemarle does, guys. Is they're pretty big into lithium and stuff like that, lithium, plastics, things of that nature. So they're in that industry. You can read more about it if you just give them, a quick search and just learn about their products and stuff like that. But Albemarle Co., they're I believe their market cap's like only $10 billion. So obviously they're not the craziest size-wise out there, but that's still a fairly large company, guys. And their earnings recently, they updated earnings and they took a big hit. What most people didn't realize though is they just paid a one-time tax payment, because when the law was enacted of the tax brackets in the United States for corporations were lowered, but all of the deferred taxes before that enactment of that law had to be paid. So they had to pay, I think it was like $400 million in taxes in 1 year. So obviously that's not going to reflect too well in an income statement. So their earnings did go down, obviously. So right now I believe they're trading like 190 price earnings or something like that, right? But it doesn't take too much digging to figure out why that is, right? Like obviously a one-time pretty huge tax payment is going to make your price earnings look pretty bad. It's going to hurt that EPS. But I believe this is one big reason why I believe in this company is because they're big into lithium. And lithium, I believe if electric cars, which I'm a firm believer in, will gain their market share, and they'll just be that status quo in 20 years. So I believe personally electric cars, electric vehicles, they're going to take over. But you're probably wondering, what does this have to do with like Albemarle Co.? So if you didn't know already, electric cars use lithium-ion batteries, and if you need you need a lithium-ion battery, you're going to need lithium. So obviously that means more business for these guys. So these guys creating lithium-ion batteries and stuff, down the road, that's going to be huge for them. So obviously once that automotive industry makes that shift to electric cars, I believe they got very good long-term growth prospects. This company's trading at a fair price. Obviously, you look at first glance, 190 price earnings, you're like, what the hell is going on? But like that's not the case when you dig into the facts, guys. So they're a good company. They've had a little bit of a fluctuant earnings over time, but their earnings are quite stable, and they pay a stable dividend. They never cut their dividend in the last bit. So yeah, this is the third stock of the month, guys. And if I had a ton of money to invest, I'd definitely be buying quite a bit of their shares too. So hope you enjoyed this video. Obviously don't just go out and buy these stocks simply because I said. Obviously do your own research, learn about the companies, learn about management and all those things of that nature, guys. So thank you for watching this video. Have a great day.